Let's go.
You're listening to Making Data Simple, where we make the world of data effortless, relevant, and yes, even fun.
Hi, folks. Welcome to Making Data Simple. I hope everybody's well, healthy, living the dream. As of this recording, COVID does rage on. I think the U.S. went over 200,000 fatalities, so I'm extremely empathetic for those of you affected by COVID. Today, we're going to have some fun. I've got a great guest, Kathy Parks. We bring, IBMers in, we bring outside folks in, and Kathy meets both criteria. She was with IBM in a number of different roles, whether program, project, or product management. She knows that business well. But the interesting thing today, she is now an owner and independent angel investor. And one of the major reasons we have her on is to hear more about women in angel investing, talk about leadership therein, and also about the underlying data used to make some of those decisions. You're going to enjoy this. Kathy, welcome to the show. I appreciate you being here.
Thank you.
I always tear up everybody's background, but I would like you to take the time and do your background justice so the listeners get to know who you are.
I started my career in publishing and then transitioned over to work for Kurzweil Computer Products on the reading machine for the blind, and then transitioned to Interleaf on publishing products, doing the software for publishing products. And from there, I transitioned out of QA testing into project management. And that's where I got an interest for process. And so at that time, Rational Software was just up the street, and they had the Rational Unified Process. And I wanted to learn that, and I wanted to work for them. So I went to work for Rational. And in 2003, Rational was bought by IBM. So that's how I got to IBM.
How do you go from publishing to project management?
So in my publishing experience, I was more focused on being able to write and create my own books. And so the transition from working at a publishing house to working at Interleaf was basically focused on using the tools that the practitioners use. So I worked in QA so that I was actually refining and making the tools that publishing practitioners use, making those better. Anyone who's been a tester or in quality assurance, you get to see the end of the process, and you get an opinion of how things could be run better, so you don't have as many quality problems at the end. And so that's how I transitioned from testing into project management, because I wanted to manage that process much better and have a better outcome.
Now, you've done a few years with project management, so then you got to tell me how you made the transition to angel investing.
At the time, around 2010, that was the big push for Software Group at IBM to be doing major acquisitions. We were very active, and I wanted to be part of that team. I wanted to be part of that impetus. And so I took it upon myself to get educated and go prospecting for potential acquisition targets for the Rational portfolio. I was looking at developer tools. I was looking at, DevOps, that sort of area. And as I was looking through startups, I was seeing, all leadership teams made up of just men. So mostly, white men. And there would be one or two women on there, and it would be the only non-C-level role, and it was usually the marketing person, or it was the talent acquisition person who didn't have an executive role. And it sort of energized me to say, this is a problem, right? We really do need these technology companies to have a more balanced leadership field. And so that's where I started learning about angel investing from the perspective of, how things were opening up to get more women involved in investing in the technology field, as well as serving on technology leadership teams. And I found this group called Pipeline Angels that basically lowered the investment bar for women investors so you could learn about angel investing and have a small amount of capital outlay so that you could get your feet wet and you could practice in a safe environment. And Pipeline Angels was great because it was also a practice environment for new women entrepreneurs, right? Like women who were starting a business, who had never pitched before. It created that safe environment for them to share information about their business, practice pitching, go through the due diligence process of being investigated by a group of investors, and created this learning boot camp that a safe environment for both sides of the investor and the entrepreneur.
Before we jump into angel investing, so what inside you brings you here? Obviously, you're extremely well versed in project management, in process, in acquisitions. You now have ventured out into the world of investing. And then there's some threaded social interests, it appears, within that. What's at the core?
My investment thesis is women-led businesses, and I also invest in underestimated or underrepresented entrepreneurs. The access to capital is not even, right? So I have some statistics for you. So 2.2% of the $130 billion total venture capital invested in 2018, only 2.2% of that went to women, even though 38% of the businesses are owned by women in this country. That tiny amount, 2.2%, that's the problem I'm trying to help solve, right? My tiny amount of investment is trying to go to solve.
So obviously that's the social interest that you have. Mind you, what do the other 35, I hope I get my math right, 35.8% of the women do? I mean, how do they get going then?
Their businesses don't get funded, right? So that's the problem, right?
So they just don't survive then? I mean, do they disappear?
Yes. They don't get funded, they fail.
All right, so let's take a step back. What is angel investing for those listening?
So angel investing is investing your own money in early stage companies. So there are ways to deploy your capital. You can be a retail investor, like say you buy stock in a public company. You can be a venture capitalist, meaning you're investing somebody else's money into a private company. And if you're an angel investor, you're investing your own money in a private company.
So why not be a venture capitalist? That sounds a little less risky.
Because you need
invest somebody else's money.
a ton more money, right? So angel investors are usually small investors. Usually the size of the checks would be, $25,000 versus VCs are investing millions of dollars.
How does that work though? If you're investing $25,000, I presume there's a negotiation, like we're on Shark Tank or something of that nature, by which there's a share of the company that you take.
Yeah. And there are different instruments you can use. So it depends on what kind of terms there are. So there could be what's called a convertible note, which is a debt instrument. And that means that you're lending the company a certain amount of money. And the note will convert to equity on a specific date at a specific interest. And there will be a valuation cap of the company, meaning, it will convert if there is a round where the company is valued at a certain amount and you get the opportunity, your investment converts to equity at a discount rate of the current price of the shares, right, in that subsequent round. You're lending money to the company. The other ways are equity, where you're in what's called a priced round, where you're actually given shares for the amount of money that you're investing. There's a share price, number of shares, and the pre-money and post-money valuation will tell you what percentage of the company you have. And then another equity instrument is called a SAFE, a simple agreement for future equity. And basically that's a contract saying, at some future date, your money will convert to a certain amount of equity. And then that instrument has certain terms in it, like a valuation cap and a discount rate and pro rata rights, which is, in subsequent rounds, there's a risk of being diluted because each time the company is valued at a higher amount in subsequent rounds. And so your percentage gets diluted each time unless you chip in more money to maintain your percentage. So that's the pro rata rights.
Which do you prefer? Is there a preference?
I would prefer a priced round, but so far I've only invested using convertible notes, and 3 of my investments have converted already. So I do have shares. In the convertible note, you're not going to get your money back. It converts to shares in the company.
And I presume that these are private shares. I mean, I've got some private shares. I mean, obviously, it's hard to get it out though when you need to get it out. At least I find it that way.
Yeah, so if you have private shares, you have to wait for an exit event. And for these smaller companies, the exit event is usually an acquisition. So when I'm looking at businesses, one of the first things I look at is, okay, who are they competing with and who are they partnering with? And subsequently, who would acquire them, right? Like that acquisition is, my exit.
If you had your way, all things being equal, you'd prefer a priced round.
Yeah, I prefer to get shares right away.
Is there a reluctance for those that are looking for investments to do the price round? It sounds like most of them would rather have a convertible note so they don't have to give as much in terms of shares of their company.
Yeah, so convertible note was the preferred instrument, and I'm starting to see the SAFEs preferred now, the simple agreement for future equity, because it's not debt.
Yeah, that makes sense. Is there a formula you use? And I guess that kind of brings in some of the data in terms of what you use. Like for me, I'm a stock investor. I guess if I was a great one, you would call it a retail investor. That's me.
Yep.
But if I was great, I probably wouldn't still be at IBM. But look, I mean, I have a formula. I look at things like earnings per share, operating cash flow per share, sales, book value per share, look at their trends over 10 years. Long short of it is I have my own calculations, my own spreadsheets, and then I come up with what I call margin of safety, which is typically 50% of what the share price is worth. It's hard for it to get down there, but it does get down there. There's events, as you mentioned, that happens, like a pandemic or otherwise, although the pandemic has caused the market to go up, or well, at least it hadn't went down as we would expect outside of the dip that we saw. Where was that in March? But it did have that dip in March, and then there's opportunities to buy, and that's when I'll pull the trigger. I presume you have some sort of formula you use as well.
I don't necessarily have a formula because these are very early businesses. Some of them are pre-revenue. They
Okay.
may be, ideas on paper, right? Like when they're looking for investment, they might be looking for a specific amount of money to fund a specific thing. I need to set up an MVP, and I need to go and get customer feedback on that MVP. And I can't afford a marketing person. I can't afford to hire anybody to run that MVP and program to get customer feedback, right? So there's some of them are still searching for product market fit. When you're an angel investor, you're much more involved with the running of the business from an ideation kind of brainstorming kind of way. Not that you're in the entrepreneur's business or anything, but you're offering help, and it's much more tactical. So the kinds of things I look at are, the revenues they do have, the expenses they do have, what's the cash flow, how quickly will they run out of money, how soon do they need the money, do I believe their forecasts? I look at their, like, if they have, a 5-year projection or a 2-year projection, do I believe it? What are some of the explanations for why they think they're going to grow by X amount? Do they have any, revenue? Do they have any monthly or annual recurring revenue if they're a SaaS business? What are their customer acquisition costs if they have customers? Do they even have customers yet? What sales do they have? What's the growth rate that they're looking at? Do they have any sales pipeline? All of those sorts of metrics are the kinds of things that I look for as I'm doing deeper due diligence into the company.
I mean, you're doing this full time?
No, this is a part-time thing. Very few angel investors can do it full time because
That's where I was going with it.
it's
You must be really good if you do it full time, right?
I would love to be able to do it full time because it is very fun. It's being involved with these entrepreneurs is so energizing and so exciting. It's really a blast.
Is there any idea that you've seen that you can talk about here? I don't know if there's a reason you can't, confidentiality otherwise, but an idea that has just blown your mind that you say, this is going to take off. I'm all about it. I mean, it's free advertising if you want to talk about it.
Well, I don't want to talk about any of the companies I've invested in because I haven't talked to the entrepreneurs to give them a heads up yet. But the business model I like to invest in is multi-sided markets, where the entrepreneur creates a platform for consumers, but also for other entrepreneurs to pitch their services or their products, very focused. So I'm seeing a lot of focus around social issues. So, for example, marketplaces to match demand for nonprofits who are looking to spin up projects, and then also for reaching out to the Latinx community, a lot of their celebrations. And then another thing I'm seeing quite a lot of is AI-based companies to help people reduce the lack of diversity in the hiring pipeline. So there are these applicant tracking system software for job applicants that weed out any diversity and can actually increase the bias and decrease the diversity of the candidates that you see. I'm seeing quite a few new startups by women to take that problem on and address this false narrative around there's nothing in the pipeline for women, Black, LGBTQ people, right? They're
Right.
all in the pipeline. That you just the algorithms are weeding them out. There's an opportunity for business.
That's interesting.
Yeah.
I got to believe there are a lot of great ideas you run into without market fit.
I'm not someone who invests in the product. I look at the problem that someone is trying to solve, right? Like, is it a compelling problem to solve? And is it compelling enough that somebody's going to spend money on it? When I get pitched, this whiz-bang scooter, no, I'm not going to invest in that. And I tell people, straight up, that's not what I invest in.
Now, how does that pitch go? I presume that there's a full pitch, full business plan you sit through today. I mean, is it done virtually? What are the logistics?
Pitches are usually done, the ones I've been to are usually at events where there are multiple entrepreneurs pitching. And so the pitch can run from 1 minute to 5 minutes, right? So they have a slide deck of maybe 20 slides and they might present, 5 slides, right? And then it's followed up by a Q&A. And what they focus on is, what problem are they solving? Who do they think their target customer is? What is the revenue or what kind of traction do they have? And what are their expenses and what money are they asking for? So it's pretty narrow during the pitch.
You must just love Shark Tank then.
I do love Shark Tank, but...
Yeah, you watch it every week, don't you? And then again, for fun.
Yep.
You're like a mini Shark Tank.
Yep.
You talked about debt, equity, and around equity, price round shares, which I would prefer too. That's why I asked that.
Yep.
Then there's the SAFE, simple agreement for future equity. I got to believe there's other forms of capital that could come into play.
I also, beyond writing a check, I do a lot of mentorship and meet with a lot of entrepreneurs. So social capital is what I try to provide. Like, I try to not be a dead end and a connection on a network. I try to connect them with other people or other angel investors who might be a better fit for them. So if somebody pitches a business to me that I'm not a good investor for, I might know someone in my network, or I might know of an angel group that is actually investing in their type of business. And I'll try and do like a warm introduction to get them connected. That's the other form. The social capital is what I provide.
Are you funded for that, or do you provide this gratis? I mean, you provide it free of charge.
Free. So I have mentorship office hours on Fridays. I'll meet one-on-one with entrepreneurs. It's usually one time I'll meet with them, but if it's somebody who wants to have like a mentorship for long-term, multiple months, then no, that wouldn't be free.
That's interesting. I could imagine. I mean, I mentor a lot of people, all for free, but they're all like colleagues and different things like that, across the business, across the industry. But I imagine that would be quite different than holding office hours for new business ideas. That could be fun. I could understand where you could, I mean, you could get more out of it than the individual getting the pitch at time and be a lot of energy. It'd be refreshing, I presume.
Yeah, and it's a learning opportunity, right? Like I'll hear about new trends that I wouldn't otherwise hear about, or I'll hear about other events that I wouldn't have heard of, or, new technologies I wouldn't hear about otherwise. So it's a learning opportunity for me as well.
Yeah, I like that. I may have to talk you offline and see if that's something that I should get in. You kind of talked to this, but I'll repeat it again. What investments do you choose, or what areas do you choose to invest in? What businesses are of your interest? You talked about what wasn't your interest. And I presume since I'm a guy, I'm a man, I'm out of your sphere of investments. Is that true?
No, if you had a
Okay.
woman co-founder, if you had a woman on your leadership team, I would
Mhm.
consider that.
You do prioritize women-led investments or significant positions in the success of said company.
That's right.
That makes sense. That makes sense. All right, so that's your first qualification.
Yep.
What are the other qualifications that you go through? Kind of back to, it's not an equation, as you said, but it's more along, here's what I'm going to invest into. So if I'm listening out there and if I got a great idea, what's going to spark your interest?
Well, I have to be able to help you. So I'm not going to invest in anything I don't have some sort of experience in. Like if I don't have any background in bringing drugs to market. So I'm not going to invest in medical or drug discovery or any startups around that. I have in the past. I don't feel like I bring enough value as, a mentor or as somebody who has experience or connections that could be of help to the entrepreneur. So my early investments were all learning opportunities. So in retrospect, some of these things I wouldn't have invested in. It has to be something where I can offer something of value besides the check that I write to the entrepreneur. Things around the software stack, things around intellectual property, things around multi-sided marketplaces, impact investment, social justice issues I care about. But there's always going to be a technology component in anything that I invest in.
Yeah, okay, so you just answered my question. There is usually a technology backbone
That's right.
somewhere. If you don't want to say, that's fine too. But how many investments have you made to date?
I've made, I believe it's 8 now. So some were direct investments where I invested alongside other angels, and some were through a fund. Because these are such small checks coming from individual angels, it's a lot of work to pitch for an entrepreneur. And so you want to make sure that it's worth it. You want to get enough money from each pitch. And so angels will combine together and they can in what's called syndicates, or you can invest through an angel investing fund where the fund has an investment thesis. Like I'm in one that's all around femtech, right? So technology startups around reproductive health or menopause health, that kind of thing. And so that way, the small checks aggregate into a sizable amount for the entrepreneur so that they can get, 50,000, 100,000 from, 10 angels, 5, 10 angels.
That makes sense. The challenge I would think that you have, unlike the retail investor, the market's fluid. I can get out. If I wanted to pull everything today, I could pull it. With such small checks, and I've done some of this, by the way, not in the same manner you're doing it. By example, I own, which is probably not the best investment, part of a bank. It's hard. I guess where I'm going with this is it almost sometimes can feel like you're donating because you're starting out small. Like you stated, a lot of these companies are, just ideas. They're just getting started. So for you to achieve or reach that event, it could be a while. So in other words, you're out of your capital for some time.
That's right. Typically, it's 7 to 10 years, and some companies just die, right? Like you have equity, you have shares of a company that's dead. When I first started, I started in 2016, so I'm still a fairly new angel. I set a budget for how much I could lose, right? So assuming everything is gone, how much can I afford to lose and not jeopardize, anybody's college education or house? You want to make sure you can afford it. I set that and then spread that across a number of companies over 2016, 2017, 2018. And then I stopped.
In my case, so I'm still waiting for the event, which will probably be a buyout. Now, there are other opportunities of withdrawal. There, co-investors could say, I'll take your stock.
Right.
But what you might find is, obviously, they want the stock at a deal, which, I'm not willing to sell that. So again, I remain in for the long haul. So I would imagine you just have to be very clear on how long you're willing to wait. And so I guess it goes back to the research you're performing on, competition, et cetera, on what would lend itself to that exit. So you know what you're up against.
Exactly. That's where you get into the due diligence process, right? You have to be thorough enough that you feel reasonably certain that there will be an exit, that you're not going to totally lose your money, right? Like in the best case scenario, you'll make your money back, right? That's the best case scenario. And so you sort of start with the due diligence with the question of what needs to be true for me to feel safe enough to invest in this? What are some of the questions I need to have be true or reasonably true that I would want to invest in this? And sometimes the first question is now the right time for me to invest in this company? Like it might be perfectly good, the company, but it's just not the right time for me as an investor.
Yeah, I guess it's kind of like Warren Buffett's philosophy of rule number one, don't lose money no matter what. Rule
Right.
number two, pay attention to rule number one.
Yeah.
But the other side of that is, well, I was looking at some statistics about new companies, and something like 45% fail the first 5 years, 65% fail the first 10 years. I don't know, ballpark. I mean, in your mind, do you have to see all of them as a success? Or do you say, hey, no, if two make it, I'm making money given the investment that I've made?
I never saw it as a way to make money. I saw it as a way to apply my learning of business formation and business sustaining, business maintenance, and becoming educated more deeply in how to run a business. So the learning opportunity was what it was about for me. And so for the budget that I set, I'm taking a break from investing this year because things are insane. And so the budget that I set, I'm, having regular contact with those entrepreneurs. And that's the number of companies I can, manage with my attention span, basically, across all those companies, having regular checkpoints, knowing they're going in the right direction and, offering help where I can. And, I can wait, the 10 years. I don't need the money right now. And it wasn't so huge that my lifestyle is in jeopardy if I don't make the money. But I'm assuming the money is gone. That's why I set that budget. Like, what can I afford to have go away and I won't feel it?
That makes sense. By the way, I do agree with you. The world, I think, is crazy right now financially.
Yeah.
I can't find anything that meets a margin of safety at this point in time. But all it takes is an event or something. We had, I can't remember when it went down to, like, I think the Dow was at 19 or even 18 in March. It can happen, and it can almost happen overnight. But again, that's back to the retail investor. We are a data show, though we do everything. We're a potpourri of whatever we want to talk about. But what data, is there any specific data that you use or you filter through in a term sheet or otherwise?
I'm more focused on the business itself. Like I said, I'm assuming the money is gone. I do look at the terms. I do make sure I have pro rata rights. So my assumption is that these businesses are going to go through multiple rounds of angel and VC investment. So I try to make sure that I don't get diluted in the multiple rounds. pro rata rights are the thing I look for. Information rights, like I want, even if I don't have a seat on the board of advisors, I at least want to have access to quarterly or annual or monthly updates from the entrepreneur on how the business is doing. And I also want the right to request that if I'm not getting it in a timely manner. So I need to know, they're continuing to grow their customers, they're continuing to grow revenue, they're meeting other milestones, if they're going for another round of investment.
On the female founders in women-led companies, any more statistics you'd like to share with us? And I'd like to ask you a few more questions on that.
No, go ahead and ask your questions.
First question is why aren't we seeing the investments, like 2.2% you started with,
Yep,
versus the 38% of women-led companies? I mean, that's quite a differentiation. Is it undetected bias? What is it?
people invest in people who are like them. So I would also say a similar effect is in your own network. Look at who you know in your network and look at who you meet with in your network and how different are they from you. Investments, angel investments are really a relationship game, right? Who do you know? Who are you going to trust? People who are like you, you are already biased to say, oh, they're like me. I can trust them, right? Whereas, someone who's different from you or brings a different perspective, you're already on your guard about. It really is just that, you're investing in people who look like you. And so I wanted to have more women entrepreneurs supported. So I was willing to put some skin in the game and invest in them.
I think you're absolutely right. That's a terrific point. When somebody comes in, does the pitch for you, what do the best pitches look like? You may have said a little bit of this before, and I got to believe there's a few KPIs that you've got to have, key performance indicators,
Yep.
before you're even going to think about it, or you're going to tell them to go back and do it again.
I need to know, the thinking behind some of their forecasts, right? Like if they say, hey, I've got 2 customers and we made $50,000 last month, but we're spending, $300,000. I believe by next month we'll have 1 million customers, right? That's, going from 2 customers to 1 million in a month. That's just false. Unless they can, justify it, right? So what's the evidence? What is driving that belief that you think you can grow that fast? The best pitches are the ones that really communicate a compelling problem, show a compelling solution, show that that compelling solution has been vetted by real customers who are going to be real users of the solution. Like if I see those 3 things, I'm interested, right? It shows that you're doing something right and that you just need a little more help and I might be able to help you.
How does this process take shape? I mean, how long does it take? What's the timeline? They come in, they do a pitch, say you've got to do due diligence.
Yeah, so different angels have different timelines. So a pitch for an entrepreneur, they could be pitching for a year or more, right, to different angel groups. So for each angel group, you'll have a meeting and you'll have a first pitch, and you'll have some investors who want to see more and they want to go into due diligence. Some do that exploration for about a month. Others take more time. It depends on how much information you're trying to gather. So in that due diligence process, you're not just looking at documents from the entrepreneur. You're going to talk to some of the customers. You're going to talk to some of the advisors who work with the entrepreneurs. You're going to do some of your own exploration and make sure that they have identified the competitors that you think they should have. You might even look at some analyst reports for trends to see, hey, did the entrepreneur do their homework? You're validating the business, alongside the entrepreneur to make sure that it's viable.
Have you ever pulled the trigger on the first pitch?
What do you mean pull the trigger?
In other words, somebody comes in, they've got a great idea. You think, hey, they're absolutely ready. I don't want to have. I want to make sure I invest in them. I don't want them to walk out of here before I get my investment in. It's probably not the nature of what you're doing because you already said earlier you're not looking at. It's not a huge money making scheme for you. It's more principle based, et cetera, which I applaud. But my question is still holds. Is anybody ever came in had such a good idea that you said, hey, look, I'm in?
No, angel investors don't do that, right? So that no.
So it's unlike Shark Tank a little bit then.
Yeah, exactly. So what we don't see on the screen with Shark Tank is they've already had huge amounts of meetings with those entrepreneurs, right? So it is a distilled 5-10 minute segment from 2 or 3 days worth of meetings with the entrepreneurs. So they've already done some quote unquote due diligence, and some pre-due diligence has already been done by the producers or the team of Shark Tank before they even get on camera. So it's a little bit misleading.
Yeah, like everything. I understand. So we got some listeners out there. Somebody saying, hey, look, this is very interesting. I have a lot of causes I'd like to invest in just fundamentally. How can they start, or where should they go to investigate whether angel investing is right for them?
I would send people first to the Angel Capital Association, which is a group that has a lot of training about angel investing, is a group of angel investors in the US. They have a lot of networking that you could look at. You might find there are a lot of angel groups in different regions. It's not just all Silicon Valley or New York or Boston. It's, everywhere. A lot of universities have alumni angel groups. So go back to your university alumni association and see if they can put you in touch with someone. Also, universities have volunteer programs where you could actually mentor some startups who might be in an incubator at the university, right? So if you didn't want to risk any money, but you still want to give back, you could at least, mentor some startups affiliated with the universities.
Look, this is fascinating. You've got my interest as well. I am an investor. Are you a retail investor as well?
I am. I mean, I'm all over.
Do you have a good stock pick for me?
No,
No.
I'm
Okay.
actually looking for good stock picks myself.
Yeah, well, if you find one, hit me up. I've got people that I do have a circle of friends that we share, but it's hard. It's slim pickings these days.
Yes, I agree.
Where can the listeners reach out to you personally if they wanted to reach out, LinkedIn or otherwise?
Yeah, LinkedIn profile is on LinkedIn, and it's KJ Parks is the name on there.
Okay, I will put that in the show notes. There's a couple of questions I like to always ask, and then I'll play a quick game just to end. And that is the first question is there a book you recommend most?
For angel investing, I recommend Venture Deals by Brad Feld and Jason Mendelson. And that is an excellent primer on what is angel investing from the entrepreneur perspective and from the investor perspective. What are some of the weird terms you're going to encounter? What are some of the timelines? What are some of the pitfalls? So that's a really excellent book.
Great. Do you have a second, or is that the one?
Well, that's the one for angel investing, but for your data audience, I want to recommend us a book that I just finished recently called The Age of Surveillance Capitalism by Professor Shoshana Zuboff. And it is packed with scholarship around how the data platforms evolved, how social media and the attention economy evolved. So it's really a fascinating exploration into how we got to where we are today with the social media and the data platforms.
Terrific. Both those are on my list.
Yep.
In an audio book coming near me soon.
Yep.
All right. Those are good picks. What do you do for fun?
I am running a lot. I'm doing, with the pandemic lockdown, I've had a lot of time to focus on fitness. So I've been focusing on running. I'm testing an app right now that I haven't decided whether to pull the trigger on subscribing, but it's really helping me update my running. So I'm getting up there with the long runs to 10 miles each time. So,
Ooh,
yeah.
each time? How
Yeah.
many times a week?
So I do a weekly long run, and then normally I'm doing like 4 to 5 miles a day. Otherwise,
You must have good knees.
yes.
My knees hurt afterwards for a couple of days. I still run occasionally, but in about 4 miles is for me.
Yeah.
And sometimes 5.
Yeah.
But God, after that, I'm like, okay, we got to rest for a little bit.
Yeah.
All right, so here's the game. I don't know if you've listened to the podcast, so you probably know it's Would You Rather. It's like this or that.
Okay.
So we can kind of see what side of the fence, so to speak, you fall in on. All right?
Yep.
You ready?
Yep.
You game? All right, you can't stay in the middle, by the way. You got to pick a side. All right. Project management or product management? I know you've done both.
Product management.
Why do you say that?
There is so much more that you have a say over in product management. You can be much more impactful about what you're building, who you're building it for, how you bring it to market, how you message it. There's just so much more meat in that role than project management.
All right, got it. Computer science or social science? I know you have a background in psychology as well, at least if my records are correct.
Yeah, social science. I think sociology, that kind of stuff, psychology is just fascinating.
All right, I think I know the answer to this. You're an avid exerciser, but running or lifting? Running or weights?
Lifting, actually.
Really?
Yeah.
You shocked me.
Yeah.
You got to tell me why. So you do both every day or what?
I do both every day, yes. But it's hard now because the gyms are closed, right? So I've had to do it at my house. So I've got some things sort of jury-rigged up in the basement. But yeah.
So do you do 2 a days?
Yes. I
When
run
do
in
you
the
do
morning and I lift at night.
How long each time?
An hour for lifting in the evening, and 4 to 5 miles in the morning is probably around 45 minutes.
Man, you must be in terrific shape.
Yeah, well, I like food.
Yeah, me too. That's probably why my knees hurt.
Yeah. I have to burn off all the food.
All right. Reading a book or my favorite, listening to a book?
Reading. I like the physical book.
I actually like the physical book. It's a timing issue for me because when I do the audio book, when I'm running, I got to do it like 3 times. So yeah, that's part of the deal because I daydream a lot. All right. Amazing idea. Listen to this one. This is the last one. Amazing idea or proven customer base?
Proven customer base.
Oh, I see. But you may be giving up on the amazing idea that may be the next Amazon.
No.
Not so much. All right. You answered those very firmly and decidedly. So, Kathy, I appreciate you being on the show. This has been very informational. I think it's going to be informational for our listeners. And look, we'll take a lot of information from it and go learn ourselves.
Great.
So thank you.
Thank you.
I appreciate it. Thank you for being on. As for the listeners, until next time, I will see you on the podcast. Hope you enjoyed it. See you.
Thanks for listening to the Making Data Simple podcast, where we make data fun. Be sure to visit ibmbigdatahub.com/podcast to access the show notes and uncover even more great episodes. Remember, the views expressed here are those of the host and its guests, and do not necessarily represent the views of IBM. Until next time,
Let's go.
over and out.